Welcome, it's the Crypto Sniper. Thank you for being with us and a Merry Christmas shout out to you all. Thank you for your support, the likes, the subscriptions, the comments that you regularly leave us. It gives us guidance on where you want to look, and we just appreciate having you as part of our team. So what am I going to talk to you about today? So it's Christmas Day, so welcome to your Christmas Day edition. Good news. I come bearing gifts. I'm not the originator of the gifts. It's the crypto market, but I come bearing gifts in terms of what I feel will be happening for us in terms of all of this. And as a result of that, I think you will have a good run-in through your Boxing Day, through your 27th, which is typically the day in between, and 28th, and then the run-in into the new year, 29, 30, Old Year's Eve, 31, and the first week into January, I think is broadly going to be positive. So I've given an update to the community. We've spoken about certain tokens that you won't be hearing about today, but we've also got updates for you on ones that I have shared with you before, and I'm looking forward to do that. So if you want to find out more about the ones that we are also discussing, sufficient liquidity, generally big, medium big caps, you can jump on. And inside our community, under our Top Gun leaders, there are other tokens being discussed. So I'm going to do a revisit on the previous video and an update on XRP, first of all, because it's very popular. And we're going to talk about how it's technically progressing. Also a little bit of a look at BTC and Ethereum, which goes hand in hand on the feedback of the previous one, why there's going to be more upside coming there. But we have chosen ones that will do a little bit more, and potentially XRP is one of them, and we've got one or two others that we really like that are part of the big caps, and then there's even some small ones that the community guys are chasing lower down. Okay, let's get straight into it. So XRP, to the charts. Well, in fact, let me bring that image back up again. I had it up. So I did share this on Twitter, and we probably referenced this particular image on the previous XRP. It's not changed. I haven't updated it with it. But the implication simply is that there's details of a fractal that occurred in the original setup since listing for this particular token, Bitstamp, way back 2013. Running into 2007, so we're here in the beginning, that goes through two good impulses, one to a flatlining, grindy, marginally up period, a little bit of a flush out, and then the best part. So actually, you sat here for the better part of 2013 to literally the beginning of 17. So you went right the way through 14, 15, 16, into the beginning of 17, round about a 4-year cycle. So 2013, 17, it's about four years. This was around mid 13. So I don't know if it was the very first day that XRP traded, whether Bitstamp had it from the beginning or not, but it's roughly 4 years. Now, I'm expecting this particular cycle to be 50% at minimum larger. And what that tends to mean is 50% better. So we've said some of these things in the previous video, but it's worth a short recap on that. What that also can mean is that even on a log scale chart view, which this is, the upside can be bigger. Now, I was running out of space for the green numbers, but log scale wise, you can get quite a big move to the upside. We're also highlighting the blue zone, how you've been squeezing. It's just a little bit more of an uptick on it. Now, I want to warn you, there's some stuff going on in actual fact. So we're going to talk about a demand destroying event, so that could make the markets volatile, but that could make traditional markets volatile and maybe crypto benefits. However, bear in mind, power cutoffs, Webium takedowns, and those sort of things generally not good for digital assets. However, within that, this technical element suggests maybe that won't be happening, but you could maybe get a bank hack or something else. And I'll show you that tweet with reference to that. And maybe crypto is the one thing that's going to do really, really well. But even in bad news and escalations, remember, you can get a pullback. Over leveraged is over. If you're, in fact, you've got to be very selective when you use leverage. You ideally want to be primarily investment in terms of if that event occurs. Okay, and there's other people apart from us that have been suggesting it in actual fact. Let's have a look at that before we go into the charts, just to get a little bit of context on that. So this lady, I'm going to play this and let's see what she says.
Oh, mine's a little dark. I just feel a lot of concern that 2024 may be the year of a Black Swan event. This is a national security event with high impact that's very hard to predict. There are a number of concerns that I have that factor into that. And not only this sort of enduring heightened threat level that we're facing, the wars in Israel, also Ukraine. And we're so divided in this country in ways that we haven't seen before. And I think that just creates fertile ground for our adversaries like North Korea, China, and Iran. And that's what concerns me most.
So it's interesting to see Iran shifted in there as well. Bit of a new entry to the usual suspects of North Korea and China. And Russia didn't get a mention, funnily enough, in there. So Iran, remember, doesn't have a central bank. It might need a little bit of democracy exported to it and a central bank along with it. Oh dear, oh dear. So that's a prediction for 2024. It's quite a dark one in actual fact. I think that's going to lean harder on debt and the traditional financial system. However, what causes panic and mayhem there can sometimes cause downside in crypto, but it could also have exactly the opposite effect. It could cause a lot of demand for digital assets that are not in the banking system. So can't tell you how it plays out, but not so great for stocks necessarily. Definitely very bad for debt and bonds and bank accounts, I suspect. Okay, back to the technical chart element. So we were updating our guys on crypto, and we'll talk about this little fellow in a minute, but you saw the bigger move that we were implying on the bigger time frame. So let's start there and go back down. So weekly, there's your bigger structure. That is a ridiculous wick. I would not take it seriously. On Binance, there was a fat finger event. That was a hammer to end all hammers. So this is the overall structure that you were seeing in the diagram I created that I shared through Twitter. Follow us on the Crypto Sniper, by the way. This was the blue zone that we were talking about as well. Pretty much a sort of upward grind like that. But what also tends to happen in these places within the grind, you get a little bit of action. So some of you may remember we called it that was going to burst to the upside. And it did, and then it got stamped on and back down. You need to take off quick. So you literally got that wind up, and all it served to do is to take you from one end of the fractal, that is this channel, roughly, wasn't at the super lowest point, to the other side with a failure. What now becomes interesting is, are we going to get inside of this as we move into the new year? A squeezy Japanesey like that, which could be very, very interesting. And on our splitter, which is very common, we teach you about fractals on splitters and within channels that then wind you up to this. Maybe the little fractal might just get you to the other side of the channel before you have a pullback, maybe a pop out the top like you did last time, and then get pulled back in, and then you go a little bit resty poos again, back in and back in, before we get that as our third high, after that being the second high. Remember, in last bull market, XRP did not run previous bull market highs on account of the legal case, generally largely accepted as best we can know. So potentially this may not be too far away. The 2024 period for Ripple could be indeed good, but it doesn't mean there won't be some downside. I'm implying some over here, as you can see, if you were to go up. You could, of course, just melt up and not come. The super green option would be, you break here, you break the channel, and you just keep going. And this is your break. In other words, we would draw a funnel somewhere here, and we would have a practical stop here, and we say you're already in the run, and our midpoint is around there, and that fractal is also at the midpoint, give or take, of a potential funnel. And that could indeed be the most bullish scenario, kind of a first cup gold nugget type environment. What do we mean by that? You're just lucky and it comes early. Your first guess, the gold nugget is under there when there's 5 cups to choose from. This is more pattern structure typical. That would mean you still have a good period going Christmas, New Year, and into the new year, but it's not all just green lines up, and that you get more pattern development, extension and set up with some down leg periods. Also, that demand destroying event that you saw, the lady that was winking a little bit with the short haircut, telling you all about that stuff. Who knows what role that might play? You might get that coming back down on news of, you know, the escalation of the war to Lebanon and now Iran, and Hezbollah is sponsored by Iran, therefore we have to bomb Tehran, you know, geopolitics. You know the story. I'm going to go less into that than usual. You want to follow my thoughts on that, go to the Reset Sniper, and in fact, probably on the Rumble channel. We won't survive. So, blue. So what else could happen out of this? Well, broadly, I see this initially for the next few days. So there's time frames. People will go, up, are you up or are you down? Short term, this little guy, I suspect is up. We're going to drop a time frame and go and see it in a minute. This bigger one, where you're including this, I think there's a couple of things that could happen. This guy can go up, but maybe later we could get a deeper draw. So let's go into the daily and have a look at that blue channel-y zone in a little bit more detail, now that you all know where you are on the map in the macro sense. So there could be a set of circumstances where short term, even though this is a nice little pop today, you could go up, but not too much further, and you could technically break to the downside. I'm not feeling that too much. I think generally a little bit of easing, but generally more up over the next. So this is like a weather forecast for the next 7 days to 14 days, taking you to end of first week of January, sort of somewhere between the 7th and 10th of January. You're going to be broadly higher, is my expectation, on balance of probabilities on most of the tokens. And you might actually see a bit more of the zing in the alts and a bit more of the give back on Bitcoin. We will be looking at Bitcoin and Ethereum as well as these updates on XRP. So overall, I think this could go up more and then calm more like that. And then we get some degree of a bit of a pop to the upside, but there is a possibility you could come down lower, providing you don't run that low, and just do a deeper draw for a low here before going and making a third high. So again, if you go in too leveraged and we get a little bit of offish geopolitical news in and around the festive period that runs us just to the post New Year, the first, second period, then you could actually get a little bit of skipping. But we're seeing Santa rallies, better news throughout the next 7 days to January the 7th on the whole. So now that we've said that, let's take a look at this pattern on an even smaller time frame and just focus on this little fractal. So this is Binance, a little bit skippy on the wicks here. Again, I wouldn't put too much weight on what happened there. Check it with other exchanges. The criticism, I would say, is this is quite heavy and flat. There's been a lot of volume. If you do a volume by price here, that will be a heavy fat point. You may end up with a point of control there. And don't forget also, as you came up on there was quite a big churn. So it's quite a psychological, I'd call this hard and soft floor. I'd go for the hard floor right down here. It's got to be, if it's hard, it's got to be lower than the lowest draw that you had. So that's in and around there, your hard floor. And then this zone's kind of your soft floor. You usually bounce there, but just run it. So you're kind of a mattress, and sometimes you can feel the tiles beneath it, but you have a bunch of sponge on it. The lighter people don't go all the way through the mattress. So that's going to be a heavy point of control. So that's why we're getting just spikes to the upside. It's going to be interesting to see how that sustains. Most of these are little iceberg tops above that, apart from the original first move up, which had the power of that initial HVF that we had you in the previous time. All of that is just minor chop in the overall ocean, compared to the big waves, the spring and neap tides that the macro is bringing. So remember, the game is to stay in on the investment side, and you've got to be really spot on with your timing. But it is possible, if we were to get up to RH3 somewhere here, that you would have a good structured pattern that could start a move to get you to the other side of that blue channel on the big side. What it does there, either it continues, a la the green line I drew for you, or you get a little bit of resistance and pullback and a bit of pattern extension. So there should be some nice upside. I'm not sure you're getting the major move right now for now, but you're drawing and you're getting close. We are in the black circles of the bigger chart again, zone. So, we're dropping into the kill point where something big is going to happen. So the black circles, we are over here, and there is it. Remember that flush out, it happened. And again, it might be a bit of a schizo wick. I don't want to overstate it, but in many instances on breakouts, you do get a little bit of a flush out before. It could happen. I'm not so sure it's going to be that prevalent a feature this time. Why? Because we're getting more of an HVF. We're getting low volatility and calming. You didn't get so much of that there. You had a bit of a channel. So there are, within the similarities, there's also differences, and understand that. In terms of scale, and of course there's better volume and participation nowadays than there would have been in 2013 through to 17. Okay, let's talk about Bitcoin in the last video that we did. So in the last video we did with Bitcoin, we were highlighting the differences by strategy of a divergence strategy on Bitcoin. This was in and around Bitcoin at these levels versus HVF method, which suggested that you would go higher. So broadly you are higher. You have had a small sell-off, so when we did the video you were here. Broadly you were higher. You got into eventually a little bit of a descending triangle, and you got resisted at what we called at the time the World Economic Forum burger. Some of you like that. I'm not sure that's going to a name that's going to help this YouTube's algorithm. So having said that, hit the like and remember to leave a comment, your most interesting token, and whether you think Bitcoin's going to break out of this burger to the top side or downside. We highlighted to you by volume by price that you're tapping on the ceiling more than anywhere else. And in the other area where you're somewhat strong, you're in the middle, marginally below, which is very close to the approach to the 42.5, which would have seen you approaching the 42k. You can see that on the 42k, bit of a high one, and the 42.5 very significant because of the head and shoulders. We've done enough on that. We're not going to repeat it. So we were talking about Peter Brunt's RSI divergence roughly here, and as I say, you're tapping on the. Have we conclusively broken out to the top side of that square? Not yet, and you had a little cell there below. So I think you're kind of treading a bit of water here. It could even come and kiss the 42.5 again, and normally you just run, but I see the breakouts being to the top side, and the volume by price confirming that. So this is looking pretty good for me. Remember, we spoke also about the dovetailing, but I don't think Bitcoin is going to be the leader here. Bitcoin's gone a bit benign and had a little bit of a sell-off there. So remember, we spoke about this. In essence, there was a double bottom there, so I'm going to just draw it like that. It'd be interesting to see how it interacts with the 42.5, whether it holds it and comes back up, or whether it would do a full revisit to the downside. I don't think we've got that in us, but who knows? It's possible. So looking good for Bitcoin, and broadly higher than when we last did it. But we said by the new year, we'll revisit and we'll declare which of the methods turned out to be correct. By the way, I think Peter has reverted on his opinion in the meantime with regards to that on both Bitcoin and Ethereum. And that's absolutely allowed. Changing opinions is absolutely allowed. People will go flip-flopping. New information, new price data, it's exactly what you're allowed to do. And we do it too. So don't be too mean. Okay, let's do this. So he was talking around here that he didn't like Ethereum. We felt this was going to squeeze out on what we call a type 3. It did. He was in and around here. So again, we are higher on Ethereum, and I would arguably say that this is looking even better now. So I think the Bitcoin dominance, which has been quite a strong feature recently, is going to drift a little bit off. We'll look at dominance in a minute, but that was your falling wedge. Here was your slightly schizo volatility as it was working out whether it wanted to go up or down. It then went quiet. That's your squeezy lower volatility, and we call that a type 3 break, when it breaks out the top, not the bottom. And then this is continuation because it is of a flag structure. It is of a flag structure for us. So yes, you are having a rest. So the two bigger tokens are kind of having a rest. You can't always guarantee that flags structures will not spill out the downside, but they very usually do. So this is different because that had a very high on the broad side and was actually a broadening structure, not a flag. You see that? You're higher here. This is clearly the high water mark, higher, there's a low, a less high high, a less high low. So you're having a stated smaller, lower, let me rather say, highs and lows in a channel after coming off what was quite your absolute low. That's quite a strong bull pole. So that would be your bull flag through all of that. And at some point I would expect that to be part and parcel of a projection further. Broadening on that with was a bit more threatening overall to this particular chart. So overall looking okay, but you can come back down still to this level before going higher. So these two aren't going to be the shining stars right now for me, but I do see them by the 7th stroke 10th, which was when we'll do the final close on that. How did they do relative to the dates of the last video? They're both higher now, but I wouldn't say significantly major zoom up levels, and they've actually both been trading a tiny bit off since their highest point. But is this further continuation for later higher, or is that a top, and will it come back into the range and levels when Peter and his RSI first declared themselves, largely on this pop out of the top of the rising wedge, which was his take on a bigger time frame he gave on with regards to Ethereum. Here we probably need a 2-dayer. That's a bit short, maybe 3. So his take was rising wedge, you're going to sell off, and you just popped out the top. So his top line was maybe a little steeper like that. You just popped out the top according to his jaw there. Again, for us, this is going to likely go further up in our opinion. So we feel the bull market has indeed arrived, but it's slow basing stuff. It needs turbo juice, much like a proliferation of the dollar, for example, after a demand destroying event. Wouldn't that help Bitcoin? And as per my comment in that tweet, we've got a 4-year cycle thingy going on, by the way. So just to re-go over that, QE cycles have occurred in 2020 as a result of the events of March 2020. A lot of proliferation. That was turbo juice for Bitcoin. Was it? Let's confirm if that is right. In fact, let's do it on a weekly time frame. Let's switch the eyes off. 2020, boom, 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 peaks in 21. So the turbo juice of quantitative easing. So you have a quantitative easing cycle that seems entrenched on 2020. Now, many people say, well, what quantitative easing of 2016? There was a Shanghai Accord as China's debt collapsed. And that was, gold started to move there, and they also started doing liquidity support for the debt collapse of China, who did all the heat creation in the depression, because there was a depression post 07-08. Right the way through, and they were buying everything, and that was peak China's going to rule the world, biggest everything, buying all the copper. That's why Australia almost didn't have the same degree of GFC. The Bitcoin halvening cycles for the bull surge also coordinated. So halvening cycle 2024, most of you know this, previously 2020, 16 and 12. So we seem to have a 4-year cycle thingy going on. And then there's the election cycle, where one guy stands down and things that went wrong on his shift, he kind of walks away from and leaves the mess for someone new who gets to say, hey, I didn't do it, it was the other guy. So they play the left versus the right scenario, and they bring all the sins there of the previous administrations to a bit of a collapse and crash, so that at the death, so that that guy's, well, I ran a good ship, but just near the end it went a bit fraught, and the other guy goes, well, it kind of didn't happen really on my shift, I'm just trying to clean up the mess. That was Obama on George W. Bush post the events of 9/11, post the events of subprime. Hey, I'm tidying up this mess. Give me a second go, which you got, as you all recall. So there is a election cycle. This is the Market Sniper, by the way. Don't forget to follow at the Market Sniper on Twitter for our takes and interesting tweets with opinions, and people with rather black-pilled opinions on what's coming in 2024 with a history of guessing really good. Okay, yeah. So that's Bitcoin, and that was Ethereum. I think we have largely covered the tokens that we want. By the way, Bitcoin dominance is the one I was threatening, and I think Bitcoin has had a very dominant period and is now going to be continue to retrace a little bit. So it went well through the 50. I think we almost made 55 on Bitcoin dominance not so long ago. We were through 55. The high point mark was, tell the people, 55.26. So that meant Bitcoin was 5 and a bit % larger than all of the rest of the tokens in the crypto cap sphere. And if you have a look at that one, you'll remember our draws here where we said you are likely to break out. There's a lot of TA in here. This was a key level. That was the 50%. That was the box you were constrained in. We told you that this is a period that you want to have more Bitcoin. This means high liquidity, much less volatility compared to other tokens. Even though if you'd been in maybe Solana, you would have made more money to the long side. You would also have had more volatility. But most other tokens haven't met the performance. Ethereum hasn't met the performance. Even XRP hasn't met the performance. The dominance has been contracting. There's a few that have. We were in HBAR. Don't forget HBAR. We gave you that through Twitter. I'll maybe take a look at that chart as well. But what you can see from that is you broke from that box out, and then you ran the 50%. You had a broadening structure pullback, which implies a new high. Your continuation there. You made there, then you made a marginally higher high, and it's on a shooting star and a rejection candle. So I'm just doing the TA on candle analysis, just on what's happened recently. And on what's happened recently, this looks very much, so let's take it in there. Help me get a little closer. This is bearish. So bearish for Bitcoin dominance. So other things are going to go up faster. And there's quite a long way to come back down. You know, even just in getting to the box here will be some way in terms of overperformance from the alts for a while. Shooting star, first of all, marginally higher high to there. Overall, this is not a good pattern structure to have in. It's resting here. You could end up with a head and shoulders even in the Bitcoin dominance. So I said quite some time ago, those of you that follow the channel regularly will recall and say, yes, he did say that. You Bitcoin maxis are going to love my message for a while. Bitcoin dominance. This is what we call a look one way, go the other way candle. Not only did it try rally, it got utterly smashed, returned to where it was, and stuffed further down. That's a very, very powerful rejection. That is a very powerful rejection, and it's brought you down to this level. A small rally here around the 52.3, that 53% basically is quite possible, and then you could be looking at a sell-off down, back down to the box zone, sub 50 and beyond for Bitcoin in its overall dominance. Now the maxis are going to hate my message, but they would have loved it when we were down here. Support were expected. Support was expected. The breakout was expected. Lots of hang time here. We've covered this, as I say, 6 months, 9 months ago when this all started to happen. And we've been updating all through 2023 on crypto, on the Bitcoin being the main hold. You just had to keep it simple and use your collateral as Bitcoin, and it was going up real nice. Now that changes. Maybe it's time to have your collateral in one of the others. Even ETH, which has been weak to Bitcoin, might do, but you can look at the others in the top 10 that will do you potentially quite well in terms of that. I'm not sure about BNB. It would have been great to be in Solana. Solana has taken BNB, by the way. Big move. XRP I still think is not a bad, it's our primary investment hold. I think it's going to do well. 9% up at the moment, but you would have done so much better in Solana over the 7-day period. And that's actually would have been true for month and 6 weeks, it has to be said. But that's a bit of a shooter. We looked at it. It had an imperfect structure set up and we left it. DOT is improving a little bit. Polkadot over there. AVAX was another big mover. So, you know, you've got a couple of others that you could treat. XRP, really like that. I think it's going to get its go in due course. So there we go. We've updated you on Bitcoin dominance, BTC and Ethereum. We've told you that we actually expect to be higher than current, and when we did the last video regarding divergence versus indicated divergence versus HVF method and patterns, and we've done an update on Bitcoin and ETH, and they've not really been the shooting stars. You can see they're 5% up and 6.5% up, kind of proving that, I think it was about a week ago that we did the video, that has transpired as expected. What about HBAR? I mentioned it, so I'll finish on it. So we've got this as an outperformer, one of them. I did give a short update on this structure over here at one point, and again we think this has turned. So let's just remind everybody we haven't done as much work on this guy, HBAR, Hedera. Let's take some of the jaws and the lights off, just as a reminder on the macro. Let's go switching off. So candles, this smells of a bottom. By the way, W bottom, we covered this in here. We spoke about the spiky glute and the more rounded bottom glute, and the coming up to this key level, key level. That's going to give you a neckline, which gave quite a substantial target. In fact, let's put that eye back on. Oh, that's not the one that's got all those jaws on. So let's see if I can find another HBAR. So for the HBAR draw, let's just, I've got quite a messy draw here. It's confusing to many of you. There's the slightly more rounded out glute, but as we approach, you might start to lose a little bit of your pace as you approach the $10 mark. You can see we had kind of a lot of structure here. For the bearish mark, you got supported when you were making the $10. That was resistance on the upside when you were doing that. Let's just take some of the other draw material off. And you're getting a little bit toppy in and around, coming up around about here. It won't overperform. There's the 10. That's where I typically put a blue line and say you're going to be at a key level. 10 cents on the HBAR at the key round number roughly there. Let's put him on and just make sure he's on exactly 10. So watch out for that W bottom. Why is it interesting? Well, it's interesting because it's going to give you one lump of a target in terms of how low you went. By the way, you didn't quite make it there. So if I was doing the mathematics, I'd probably move you down to 9.5. 10 is the key number, but you didn't make it, and we expect a key number to be just run. So I'd take you down to the 9.5. That's now run in, and you have run it there. That's probably why you're getting a little bit of a loss of momentum. Let's take that volume by price off. So you're getting a little bit of a loss of momentum because you're coming up to that neckline where we expect to see a little bit of a resistance and a pullback. You could even get a little bit of a right shoulder. See this interaction with the 9.5 and 10 numbers over there. You get a little bit of bounce. When you're coming down, you've got a bit of pushback. When you're going up, you're going to get a little bit of pushback potentially too. You might get a bit of churn and chop there before you make further progress. But the good news on that is, and I'll draw it with you for HBAR, is that again, with this fella, we're expecting upside, and we take it from the absolute lows, grab him there. 9.5 is my number. We're sticking to that, and we grab him, and you'll be shocked. Don't forget, we've got an upside HVF generating 15 cents, and you're trading 9 cents. That's not a bad move on its own, and you may be able to buy it cheaper than that in the short term. Longer term though, however, our macro target on that W bottom is going to give you a great reversal, and typically reversals are secular. That means you continue to trend. So if you've called the bottom and you've made that target, you would probably just reduce size. You wouldn't shut entirely. And that's in and around the 25.7 marks for us over there. So another major move. You probably run 26, 27, and even 30. You will note that you had a little bit when you were approaching these levels interplay with that point as well. There was a bit of a flat bottom and a channel, I would say a ledge on the downside of the cliff, and then over here had a little bit of a flag also on the way down. So there's quite a bit of price behavior that occurred there. So those will be points where you'd likely have some pullback. So if you've taken some off, you can actually load up a little bit lower down, but don't go back up to the previous size you once were. You've got to retreat from bull markets as they get higher, not get more aggressive as your confidence grows. This is inverted pyramid trading instead of pyramid trading. So size must get less as you get later into the bull market, not more. That means you have to be fairly early and fairly within the confines of money management, aggressive early and back away, because time passes and the thing matures. It matures and it slows down. Okay, so we've spoken about HBAR and we've given you some ideas of some targets where you may get rests, 15 and around the 26 cents mark, all well below the 9. You could have been long from around 6. Which makes a heck of a difference in multiples, in getting 6. And by the way, you could have been long from 6 on the axis right here, potentially. Getting up to 9 is already a 50% move that you've missed out. So don't forget, click that first link below. Make a commitment yourself to make this year coming, 2024, your retirement out, rich slave, no debt, lots of properties, lots of assets, lots of things that you hold and possess yourself, so that that demand destroying event that could come with all these great prediction Nostradamuses all over the place and telling you who might be doing it, right down to all that level of detail, you make them not have the same power over you. Optionality, be able to buy yourself options. Do not be susceptible to the interest rate spikes, to the economic cycle, the new war and all of this stuff. You should live your best life and be away from that. That's the message I want you to take in. You've got to be mentally strong. You've got to be healthy. Enjoy every beautiful thing of the day. I'm going out. I shall walk on the beach. I will swim in the sand. Nature just gets more beautiful. The bigger the psychopaths go psychopathic. And that's how you should treat the world. Be with your family. Be with your best friends. Stay away from the gaslighters. Switch off that TV and be your strongest, healthiest self that is fit and ready and coping and building wealth, retaining wealth, in an environment where there are interests that do not seek you to retain wealth. They want you ward of state, welfare. All this bad luck happened to you and took all your money. Oh dear, oh shame. Here's your UBI, comply. We're here to stop you from needing to be that guy. Okay, that's it for me. Have a great Christmas. Have a great New Year. That's your crypto update. We'll talk again soon. Thank you for watching.